Well, all things considered, a fairly muted day with 10-year Treasury futures trading today. We're in a pretty tight range. We've been both in the positive territory and negative territory. Traders continue to sift through the different kinds of data and news flow that we're seeing today. Some bearish impulses in the market include the ISM services report that came out this morning. It just blew away expectations, actually the highest read we've seen since prices were recorded in 1997. Factory orders were down today. However, they were only down half of what consensus expected. And of course, there's a lot of carryover support from Friday's BLS report. Also have to keep in mind that 10-year break-even, inflation break-evens are up slightly, around 236. That's also bearish from prices. On the other side, we see some supportive action too, with the dollar just getting slammed today against most majors, but specifically Euro, Australian dollar, and Swiss, seeing a risk-on rally in equities in the early part of the day, and just seems like that's really supporting Treasury futures. Also, news flow with Republicans listening to President Biden's infrastructure plan, but not close to supporting his full $2.25 trillion bill. Also, COVID's in the news, especially in Europe and all the unknowns there. That's actually supporting futures. When it comes to volatility today with options, if you look at the whole options curve in June on a 1-week basis, we're in a 20th percentile. A 1-month basis would be 35th, and a 3-month volatility right now is in the 60th percentile. When we look at the call wing versus the put wing, both up ever so moderately, but they're up exactly the same, so that keeps skew unchanged on the day, and at-the-money vols are slightly lower. When it comes to options action, trades that strikes that I've seen trade a lot, the 129 and 129 half put in June. Also in June, the 132 call.